we've been following the market very closely, and here with us to discuss where we stand heading into the weekend is CEO of Wilsey Asset Management, Brent Wilsey. Thank you so much for joining us today.
Thank you for having me.
I said to you, wow, this market seems so volatile. You said, not really.
Yeah, 100 points, 200 points, percentage-wise of 29,000 is not that volatile. It might seem like it. Back when the Dow was 10,000, yeah, it was a big move. No, not so much.
Because we have to really look at the percentages is basically what you're
yes.
saying. The jobs report. Okay, when you sat down, and obviously we were talking a little bit about the jobs report, you said, oh, it's kind of a little mixed, and it all depends on what you're looking at. Expand on that.
Sure, because we talked about, like, oh, we missed the estimate. It was supposed to be, what, 160, came at 145. But I tell people, you got to remember, November was revised down to 255,000 jobs. That's a big job number. So we can't expect to have that big number again. And also, too, we got to remember Thanksgiving was the end of the month, so that drew some jobs into November, taking them from December. And the other concern, too, was, well, manufacturing fell by 12,000 jobs. That's terrible. The problem is, I'm telling people, manufacturing is not like when our dads were, actually my dad was older than your dad's, but they would go to job manufacturing, right? They'd go manufacturing, and they do the same job for 25 years. Sure. Now technology is changing. There's actually about 477,000 manufacturing jobs open, but the people don't have the skills or the knowledge on how to do those jobs. So that's a problem. Jobs are there, people can't fill them.
People need to get trained.
Yes.
So for people who are in retirement, heading into retirement, should they do anything different with their investment strategies right now?
That's a very good question, because actually we are kind of concerned. I mean, we are at these highs and so forth. The landscape is pretty good. We talked about a great job market. We have good non-manufacturing numbers. Consumer confidence is high. So things are looking pretty good. But this is what we call a momentum type market, where the momentum is bringing it up. It is getting a little bit uncomfortable. I would not tell people to cash in their 401k or cash in their investments, but be cautious, be aware. And then next week we have earnings reports coming out from companies. That's going to be a big signal, because if they don't come in good, this momentum could go away and we could have a big pullback. But I do believe the economy is strong. We should have some good earnings reports coming out next week and thereafter, which I think will buoy the market some more. And I think we could see Dow 30,000 is a possibility.
How quickly could that happen? I mean, that's pretty lofty. We hit 29 today, and you're saying possibility of 30,000.
Yeah, it could be in a month or so, because it's only about 3.4% away. And to put it in perspective, that's like Apple going from 310 to 320, only a $10 movement. Pfizer, an increase of $1.49. It's not like a big movement, but it sounds like it. And 30,000, that is a big number.
Sounds like the market is totally ignoring all the politics. Really. I mean, the geopolitical climate that we're in, everything that happened with Iran this week, the impeachment talk. Yeah, we're zooming, and you're saying going to continue to zoom. Yeah,
there's a lot of liquidity out there. Interest rates are low, so a lot of positives for investing right now. Politics are not the main concern, because I hate to say this, but it's become like old news. Nothing changes with it. It's the same thing we heard 3 years ago. So people are focusing on what really matters, how the businesses are doing, where money should go, and they're kind of turning off Washington, because it's the same story we heard 3 years ago.
Well, one of the big stories today was a drop in the Boeing stock. So how much did that impact the slide or the correction that we saw today?
Not as much as I think it would, and it was bad news from Boeing. I mean, after seeing that report, I don't think I want to get on a 737 MAX with the employer saying, I wouldn't fly on that. Well, it's bad news for Boeing, and I've been saying for the past year I would not invest in Boeing, because I think they do have some internal problems. So it wasn't as bad as it could have been, but I think it's going to get worse for Boeing before it gets better.
Okay, so since we're talking about stocks, the first time I met you, Brent, when you came on here, no kidding, you guys, the next day, everything that you told us about the stocks to watch and everything with the stock market, it was exactly right. I actually couldn't believe how accurate you were.
You put a lot of pressure with
me on that one. No pressure here. But Tesla, I mean, everything seems to be moving toward electric cars. Tesla may hit $500 a share. Is that still a company you could invest in? Is there still room for that?
No. I mean, that's a hype stock. I mean, it could go to 600 because it's very crazy, but the fundamentals are there not to support it, or not there to support it. And what's amazing about Tesla, the market cap, which is the total value of Tesla, is worth more than Ford and General Motors combined. It's very wild. It makes no sense, and those people make money off it, but it's not a sustained investment. We would never invest in Tesla, and I applaud people that do it, make money. Congratulations, but it is not a good investment. I'm sorry.
Okay. Interesting.
We always love talking to you.
Well, thank you.
Brent, thank you so much for coming in tonight.
Thank you, Brent.
You're welcome.